What's going on, everybody? Welcome back to the channel, and in today's video we're going to be speculating a little bit. And before you click out, you're like, Antonio, I don't like speculations, I just want to know things. Trust me, you're going to want to watch this whole video. I found something super interesting that I've not seen anybody else talk about. I know everybody talked about inflation, recession over and over again, pretty much non-stop topic, but I kind of went back in history and I was kind of looking at somewhere that different countries, something similar that have been happening to what we currently have in this country and in the US specifically, and I found a lot of interesting statistics that I want to bring to you guys. And maybe, yes, maybe I'm speculating, maybe I'm reaching, but let me know. Just watch the whole video, and then in the comments let me know what you think, if there's things that we should be concerned about, or maybe there's not. So here's the chart. This is the Japan index. I know you might be thinking completely random, but let's just look at this chart for a second. We see that the Japan index pretty much peaked around 1889 to 1891. There was a huge bubble, as you guys can see, and it still hasn't recovered. And it's been almost over 30 years at this point. And you know, if you had bought the top, you'd still be down. Now, if you had dollar cost average all the way through, you more than likely will still be in the profits. But why did this bubble happen? You know, Japan once upon a time during the 70s, 80s, and 90s was considered one of the biggest superpowers in the world, and a lot of people were actually in fear that potentially Japan was going to take over the GDP of the US. And yes, the US is much bigger, but GDP is adjusted by the population size. So after World War II, Japan had to go through kind of a rebuild process, but the rebuild process was actually really great. Their technology has gone pretty much above anyone else in the world. They were exporting a ton of cars, and they were just making a ton of money. That kind of leads us back into the 80s. Their growth is going amazing, and at this point they're thinking that maybe they'll be able to overtake the US as the biggest superpower in the world. So Japan thinks, okay, great news, now we'll be able to export much more. Now, since you know we can export much more, why don't we just print a ton of money, we give it to all our citizens, we give it to a bunch of corporations, and they'd be able to buy more stuff from America and help our GDP. In theory, that sounds great, but that's not really how things happen. Now, that kind of brings us back to our first similarity that we see. We talk about printing money into an economy. That kind of brings us back to all that money that the Feds have printed the last 2 to 3 years into our economy. Now, when that happens, Japan also eases up on a lot of the restrictions they had on investments. So finally, Japanese people can finally invest into the markets freely, and they can spend as much money as they want to. This causes for the Japan index to actually 10x of value. So from a relation of a few billion, it goes up a ton because people had a lot of money to invest. Now that brings us to my second point that is very similar to what happened. Actually, from before the pandemic, before we had all this money printed, retail investors in stock markets were on average around $3 to $5 billion, more or so around $3 billion. Now, after the 2020 happened, the average is around 30 billion currently, which shows that it had 10x the total retail money from before to after the money was printed. Very similar to what Japan had gone from 10x from before to after all the money had printed. Now Japan goes kind of what we kind of been running into, the US, which is inflation. You find out that, hey, printing a bunch of money and having really low interest rates actually is not as good an idea as we thought, because inflation is a real thing. So what did the Bank of Japan decide? Well, in 1989 and in the late of the 1989s in general, they decided to just pump up the interest rates a ton to beat off the inflation. Again, you might be seeing a pattern here. I keep talking about this story, and you may be thinking, wait, the US, aren't we doing that right now? Aren't we bringing up the interest rates currently so that we can beat inflation? Yes, that's exactly what we're doing. So then in 1989, the bubble burst. That becomes the top right around that area of this whole index bubble of the Japanese market. And not only just that, also real estate was in a bit of a bubble in Japan, very similar to how it was in the US. Of course, because there was so much free money and interest rates were low, the prices at home were really crazy expensive. And actually, the whole real estate of Japan was worth much more than the whole real estate of the US. So just imagine how crazy that is on itself. Then after this really high increase of interest rates really quickly, and that is a key point that you have to understand, that if you go from zero interest rates to quickly really high interest rates, that is what burst a bubble in the commodities. For example, 2008 interest rates were actually kind of higher, if not about the same levels that we currently are, which was not really the issue back then, because interest rates have been much higher than they are. It's just how quickly we've gone from pretty much 0% of really low interest rates to now over 7% interest rates. And exactly that's what happened in Japan. This causes an issue because a lot of debt that people have taken, now they own a ton of money on that debt. And even the government of itself, they have their own debt. And if you increase the interest rates really high, now the debt that the government owns, they have to pay back much more every single month. So the big catalyst for the Japanese commodity to go into a bubble was something called the Plaza Accord. This agreement was based around the dollar value. The DXY, or the dollar index, at the time was extremely high. It was a rapid growth of the dollar strength. You may be thinking as an American, like, oh hell yes, the dollar goes up, we're doing well, right? Actually, it is not really like that, because then exports of goods and services become really expensive. So for example, exports to Japan cannot buy the same goods and services as they used to because it became much more expensive. So to combat that, the US became and decided to do this Plaza Accord agreement to devalue their currency versus their trade partners. Now the dollar was going up so much in value because interest rates were really high. The reason being because in the US at the time, in the first half of the 80s, we had extremely high levels of inflation. You might remember we've spoken about that on this channel a few times, the 70s, 80s being a really crazy time for the US economy. Again, now we go back to how many times are we seeing a pattern on what was going on in Japan to what's going on now, a strong DXY. A lot of inflation, high interest rates, a lot of printed money. There's just a ton that you see from the 80s that's currently happening right now. Another huge component of what made this Japan bubble really go crazy was that they allowed for public company to invest in other public company. That might sound crazy to you, but it's actually not. We currently have that in the US currently. For example, you have Tesla that can buy Bitcoin. You have MicroStrategy that can buy Bitcoin. In Japan, that was banned until the Plaza Accord was passed as one of the laws that was in there that public companies could buy other public or speculative assets. Now, because of that, a lot of those public companies, for example, Samsung in Japan, will buy a ton of Toyota, and then if one kind of crumbled, they all crumbled across with each other. Again, this may seem like a crazy kind of thing that like, hey, why would they all buy some speculative assets? But we have that in the US. We saw with Tesla. Hopefully it didn't go too bad for them as far as we know. MicroStrategy, still questionable if it's going to go good or bad for them. But there's just a lot of ton of debt, and a lot of these companies were actually interlinked. So when the market finally got destroyed and came down, all those companies kind of collapsed together. Now again, in the US, we've not seen this yet particularly, which is great, but we have seen a ton of freeze hiring, slowing down the hiring, having to lay off people. We're thinking about Coinbase. So we're not seeing the exact same when it comes down to this company collapsing, but we're seeing a lot of layoffs happening. So Japan saw a huge increase of zombie firms. If you're not familiar with a zombie firm, it's a company that's pretty much not actually producing anything. It's only live because they have debt, or they have creditors, or they have help from the government. So it's a company that's actually not really adding anything back to the economy. And after the aftermath of this whole bubble, this commodity bubble that happened in Japan, more than half of companies in Japan were non-productive. They weren't making any money. And just to add to all the issues, Japan saw a flattening and a depopulation of their actual people's growth. So there was less people year over year because people just weren't having as many kids as part of their culture. Now, in the US, likely we still have some growth, but we have seen a flattening curve with the population, especially in the last 2 to 3 years. And most famously, who's most worried about this is none other than Elon Musk himself. He's actually talked about this. And look into their history, depopulation and flattening curve of people's growth is actually a very major issue for any economy. It usually indicates that the economy is slowing down and maybe reaching its peak for that foreseeable future. We're under the pressure, which, we're not really wrong to think that stocks only go up and economies only grow up. But stocks only follow the economy. And in the case of Japan, they had reached their peak around the 89 to 91 real period. And after that, both their GDP was slowing down and their economy as a whole has slowed down. Part of it was the depopulation. Now, if we believe if all cultures, all economies are eventually going to reach a peak and going to come back down, we have to believe that at some point there's going to be signs showing that may this have been the top. Now, I don't think currently we're there with the US just yet, but we might be more close to it than a lot of people give it credit to. And doing this research has kind of shown me and opened eyes that maybe like stocks don't only go up forever. But that is also fine as well. And the economy actually, or a stock market, doesn't need to push all-time high forever for investors to make money. Actually, if you guys can see, the Japanese market has a annual all-time high in over 30 years. But actually, if you're dollar cost averaging and bought in every 3 to 6 months, you would have still been up over a long of 10 to 15 period of time. Even if you were super unlucky and you first started invested at the very exact top of 1989. Going back and kind of looking at what happened in Japan, it was actually super interesting. And yes, there is a lot of things that are very similar to what happened back then, but there's also a lot of things that are not very similar. For example, Japan, US, just in general, are completely different countries that depend on different things. For example, Japan, being an island and being limited in resources, much more than the US is, has a lot more that needs to push with on the technology side for their economy to growth compared to the US. We have a lot more crop, we have a lot more labors that can be implemented in our GDP to help us keep growing our economy. Let me know in the comments down below what you guys think about this whole situation that's going on, and if you yourself see some similarities between Japan in the late 1980s, early 1990s, and the US currently right now. My investing strategy has not changed just because I don't think, even if we don't make any all-time high in the next 30 years, actually dollar cost averaging will probably still end up making you the profits anyway. It was just something super interesting that I would like to bring to you guys on the table, a different perspective that I don't see many people talk about, which I do think has some relevance to just even being talked about and being understood in overall the financial media currently. And as always, if you guys would like more videos like this, if you want to trade live with me every single day, if you invest with me live every single day, hit the links in the bio, join us in our Discord, and I'll see you in the next video. Peace.